Okay guys, we're here at the Apiary Fund doing our Facebook Live. Today, I'm dressed up as Todd Grantham, one of the instructors. I think it's one of my best costumes that I've got. So I'm going to go the whole way as Todd. So the beard is gone, but it'll be back shortly, I'm sure. So excited to have you here. If you can hear me okay, thumbs up, do little happy faces, whatever else you do. And we will talk today a little bit about the 3 keys of trading success. Now, I was going to do the 3 secrets of trading success, but nobody would tell me what they were. So I had to go with the 3 keys. Now, if we look at trading success, we all define it a little bit differently, right? So some define success as having consistency over a long term. Some will define it as having a big winner. So whatever you decide to define your success at, you can use these things that we're going to talk about to help with that. So first thing that I want to talk about, and I'm going to use just my experience and what I've done in the past in going from not knowing anything about trading Forex to what I consider a success as a trader. So the first thing, and we're going to do this with M's, so the first M is going to be our method that we use. So when we talk about method, we really are talking about things like our rules that we have, the processes that we go through when we're trading, right? And we all hear all the time about, you need to have a trading plan. So I'm just going to put in here our plan. And for those that come to the Daily Forex Fanatics and hear me talk, when we talk about plan, one of the things that's part of this plan is a strategy that we need to have. Now, for me, the strategy is really secondary to other things that we're going to be talking about here. But our method is something that we have to have. If we are trading right now without some type of a method, some set of rules, strategy, we need to stop and we need to figure out what it is that we're going to be doing so that we can be consistent with having this method. And being successful without a method or without a strategy does not help us in the long run, right? We want to make sure that the method that we use, the strategy that we use, is something that we can do day after day, month after month, year after year in order to be successful. So the issue that we have to deal with, or that many of us deal with when it comes to this particular key or the strategy, is we spend years and years looking for this particular strategy that we think is going to make us successful. We have to be careful about that, because what happens is we go through a circle of death, so to speak, when it comes to this. We decide that we need a strategy, we go out and we try to search for that strategy, we find a strategy, we trade it, we don't have success, and then we immediately give up on that strategy. And so we go through this circle, and then we're back to the point where we're trying to find a method or a strategy that we're going to trade, and we continue to go through that cycle. And we've got to avoid that as much as we can. So having a strategy should be simple as finding something that's going to help us identify entry points and exit points. I always joke about the idea, buying low and selling high. If we can find something that will get us in at a low price and get us out at a high price relative to whatever that is, we're going to have a strategy that's going to work for us. So focus on having this. Now, this is a great time of the year because we're coming to the end of the year. In the Daily Forex Fanatics, we talked about changing our mindset, changing how we think about what's going on. And if we've had a culture where we haven't had winning or success like we want, this is a great time of the year to go and start to think about how are we going to change our own trading culture so that we can be successful. And as you know, the holidays are coming up. We just had Thanksgiving here in the U.S. We've got Christmas. We've got New Year's coming up. So it's a good time where the markets may not be so good to trade, to take some time to really start to develop this and figure out how we're going to change our culture in our own trading so that we can make this next year even better. So that's the first thing to think about. Second thing, the second M is money management. I'll abbreviate. I don't know if that's an official abbreviation, but we'll go with that. So money management. Money management includes things like risk management, knowing our position sizes, making sure that we're not taking too much risk. We've talked in the past about the turnover ratio to know how much risk we're willing to take. And that is simply, if you keep turning over at night, you're probably taking too much risk. We want to make sure that our risk is fits into who we are. Some of us like to take lots of risk, some of us don't. For those that know me, I don't like to take a lot of risk, and so I like to keep things fairly simple. And this, for me, was a huge key to becoming successful or achieving the success that I wanted to have. When I first started trading back in the early 2000s, that's when you could open up a FOREX account for nothing, and you could have 400-1 leverage, and they would let you do pretty much anything. So what I would do, and I've told this story in the past, where I took a $500 account and turned it into $40,000, and then within about 2 days turned that $40,000 back to about $500. The issue was not in so much the trading strategy, but the money management strategy to be able to handle drawdowns that were happening with the account. And so I was trading, with a $500 account, standard lot sizes, where when it did move in my favor, I was feeling pretty great, right? When it didn't move in my favor, I wasn't feeling so good. And hence, I quickly lost everything that took really months to be able to put together. So we have to have money management that is equal to us or you. You've got to know who you are to make sure that that is appropriate for what you're doing. Just because myself or Nate or Sean or Brian or any other instructors say, don't risk more than 2% or 1%, that doesn't mean that that's going to work for you. If you can't handle working with 2%, then you've got to drop it down. Now, when we talk about the Apiary Fund and getting funded and doing those things to get funded, we're really focused on the PIP side of things, right? So we want to be able to figure out how we can gain consistent PIPs. So the requirement is not to take a $1,000 account and to turn it into $2,000 in order to get funded or to move up in funding, or from $5,000 to $10,000. What we're looking for is the consistency in being able to gain PIPs. And so for those that are new, for those that are just starting out, I would suggest starting out with one micro lot trade at a time. Now, when I talk to people and tell them this, the biggest complaint that I hear, and you probably can think of it, is that we're not going to make any money trading one micro lot. So if I'm trading the Euro US dollar and I trade one micro lot and it goes up 100 pips, that's only going to make me about $10 because it's worth 10 cents a pip. But if it only goes down, if it goes down 100 pips, then I've only lost $10. And that's what we have to focus in on when we're talking about this second key in money management, risk management, is not so much how much money we're going to make right now, but how much money we're going to be able to keep, how little of a drawdown we're going to be able to have in our trading account. And if we can keep that to a minimum, we're really going to be able to have the advantage of developing that consistency, making those pips, and using a micro. Now, I'll tell you, as you start to develop that consistency, and again, these kind of go together, this consistency with this method, what we're going to do is by having this micro lot, it's going to help us really refine and make sure that we're consistent with this method and this strategy that we're using. It's also going to help us with the third key here that I want to mention, and the third M is going to be our mindset or our trading psychology, because what happens is, as traders, as soon as we start taking too much risk or our position size gets too big, it gets into our heads and we start to make decisions that we shouldn't be making, right? We start to do things from an emotional standpoint as opposed to a methodical standpoint or a logical method that we're actually following. So starting out with these micro lots is a way to begin to develop that consistency within our method, and also to build confidence with who we are as traders. And as we see our account grow, and we talk about having a equity curve, and the equity curve going up is what we want to see. What typically happens though is we have it go up and pulls back, and we've got this long-term thing. So this is what we're trying to develop here, and we can do that as we have this method and as we have our money management. Now, I'll tell you, for me personally, starting small, staying small, and building up from that was the way that I was able to build that consistency and be able to develop the success that I want to have. But what happens is, if number 3 here is not correct, then it doesn't matter how good the method is or how good our money management is, we're not going to be successful. So, for example, I can have the perfect system. I can sit down and, Sean can teach me the perfect trading strategy, and he can say, do this, 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 and that, and whatever else that he's doing, and he can say, go do that. And so now I've got this, golden nugget, this diamond, this Bitcoin in the rough that we're going to be able to take and have as a perfect strategy. And then I take it back to my house and I decide, well, I'm not going to trade it, or I'm going to do something different. Well, my mindset or my trading psychology has now taken what was a good method and invalidated it, because now I'm doing something completely different. The other issue, and this is something that I had probably the biggest problem with, and I'll talk about it because I think it's important. I had a very difficult time with this, taking a loss. Now, I'm sure that nobody else has any problems with that, but I had a difficult time in taking a loss because I felt like the background that I had, that I was coming from, that if I did everything just perfect, if I did everything just right, that I could create something, in this case a method that I'm trading, that would be perfect in every part of it. The whole process would be perfect, right? So if I do this, 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 and this, it's going to get this result. Well, in trading, it doesn't work like that. A plus B doesn't always equal C because of all of the other elements that might be around there. So I thought, well, I should be able to develop something that I could do that will not let me lose or will not have a loss. And so what I was doing initially is I was getting into a trade, and when it would go down against me, I wouldn't get out of the position, right? And I'm sure that some of you experience that. And then it goes down and goes down, and we maybe even try to buy more to offset that, to dollar cost average, whatever we want to call that. But we do everything that we can to not take this loss. Now, what happened was pretty simple for me, and I talk about this in terms of my emotional roller coaster. And again, if we use emojis, if I had emojis here, I'd have a real happy emoji, and then I'd have a real sad emoji, and then I would have a real happy one, real sad, and I'd have a whole bunch of these, right? And my emotions when I was trading initially would go like this, and I'd have these extreme swings in what I was doing. And so what I would look at is I would kind of graph this out, and I'd say, okay, so this, I'm going to put a big E here for extreme, either extremely happy or extremely sad, right, that I had done something. And this was kind of my happy place. Right in this area between these 2 points here, this is where I wanted to have my emotions. Now, kind of going back to both of these things, my emotions were influenced heavily by these first two things. If I felt like I did not have a trading plan, where I didn't know where my exits were, my entries were, my emotions started to get into these extreme areas. If my money management was too high, then it would move into these extreme areas here. And so I had to figure out and decide what was going to happen so that I could have a strategy that kept me out of the extreme, and what was my position sizing going to be, my money management, my risk management, to keep me out of those extremes. Okay? So now what I want to do is I want to make sure that I never enter into the extreme, and I want to be in this area here. I'm going to put a big face. I'm going to put just kind of a sideways with a little bit of a smile at the end there, because I don't ever want to let my emotions get too happy or too sad, right? Because what happens is we get into these extreme areas again, we start to make decisions, we start to do things that step us away from following our method and following our money management. So when we talk about the 3 keys of trading success, having a method, having our money management, having our mindset, these all work symbiotic, right? That's a pretty good word, right? Meaning that if you eliminate one of these, if we eliminate our method and we don't have our method, then it doesn't matter so much about our money management or our mindset. Even if they're really good, we're not going to be successful. If I have a good method but eliminate my money management, then I can get myself in a situation where my emotions start to move into these extreme areas. And of course, I want to avoid that. And if my mindset's not there, like we said, it doesn't matter if our method and you can relate back to either any of these 3, that you need to either change something in your method, meaning your strategy, your trading plan, something in your money management, or something in your trading mindset. So think about your culture right now, or the process that you go through, or your habits, whatever you want to call it, it doesn't matter. But what is it that you need to change right now, so that in 2018 you can have that success that you want? I know for a fact that everybody here at the Apiary Fund wants everybody to get funded, to be successful traders.